2 different applications, but they just seem to not work properly, so just left it as that. Next time I'll try and get the screen share on here as well, so make things easier when I'm doing these little videos. But anyway, moving forward, we're live, and I believe you should have got a notification by now. So let me just double check on my account if we are showing as live or on private. Yeah, we're live, we're good. Sweet. So, yeah, just pretty much moving forward from that. Let me plug this in. Get an additional light up here as well. Give me a second. It's getting a bit darker these days over here, so do appreciate having that additional light in there. That's a little bit of yes, Ankit, wicked. Yeah, it was working fine, but the problem was I couldn't use my TradingView for some reason. Every time I started clicking something, it was giving me some sort of error with the sharing platform. And to be honest, like, I don't want to be mid conversation with someone showing them something and then the platform's just not working properly. So I was kind of like, you know what, I'll leave it for now, try figure it out a separate time, and then eventually we'll have it up and running. I think mainly because I'm using the tablet and I'm not plugging it into a computer or anything. So when I'm streaming it, I'm streaming it off an application, and the applications don't seem to be functioning as well. But anyway, besides the point, how has your week been, Ankit? Taking any trades this week? I'll show you what I'm looking at in the meanwhile. And on, so we're going to go through the indice pairs today. Let's have a little quick look. Bring that up. Where's my pen? No trades as of now, I guess. This week's been without a trade. Yeah, I mean, look, do you know what? It's a good thing as well. It kind of just shows you, like, sometimes stepping away is a good thing as well. Sometimes actually getting involved is a good thing. You know, you learn that patience as well. So you're not in the mindset of trying to take a trade every day. I think there's always a positive in everything you look into. Definitely there was trades though. So it kind of works 2 ways. You know, if you look at the reasons why did you not take a trade, and then you look at the reasons of why you stayed out of the trades, you know, there could be something in there like a flow state potentially. Was there any particular reasons that you came by why you stayed out of markets? So I'm looking at the DXY here. We've basically failed to continue higher so far. Right now, if I just zoom up to the 4 hours so you can see it, we were basically trying to target those areas up there. We are trading within all of this. We were looking for continuation to form here. Still can form. This can still recover, come back up, even come back down one more if it wants to, and do that, and then you get a little bit more of this, which is possible. I don't think that's going to be the gameplay. I think it's either going 2 ways from here. It's either pushing up, we're getting continuation and we're moving higher, or on the other light, we're actually selling off. So we're getting continuation here, accumulation of volume in this area, and then we're moving to the downside. And the beautiful thing about it is if you do look closely, you've got that. Not the best middle section in the world, but you have basically channeled into it. I'm not a huge fan of taking it from this point because it's a little bit subjective in light, but you can't argue that it's there. So what we might end up seeing is potentially a drop off from this area and then a larger continuation forming here, and then it just drops off, and then you basically got it like this, you know, and then even if the continuation is here, it's still great. So though that's basically what I'm looking at, then you can basically play it to the downside or even further. That's what I'm looking at on the DXY. I think the DXY's got a lot of potential to move to the downside right now. I'm waiting patiently. Obviously this is the 4 hours, so if we go down to the 1 hour, looking on that for a bit of a refinement. What I do like about this a lot as well is obviously you can see that the volume was literally hovering at this area and it's kind of just taking a bit of a dip. Only way that I'll be looking for a short now is if we do sell off and we come back up, and then even if we do develop something like that, that would be enough for me to then look at that as being a short. And then I can basically look at that as one structure of itself. I can get priced in that area, and then I can basically play that to the downside. And that's basically what I'll be looking at. Then that would be the sequence of what I'd be looking for. Right now though, one thing I will be paying attention to is how we approach this area. So there's a level of neutrality to it because we did come in correctively. So the fact of the matter is, because we came in correctively, we could actually just hover around here for a bit, fail, start creating continuation, and next thing you know, we're all the way back up here. And then this just became a part of that. And it was always this. And then it's making its move, and then you would take advantage of something like that, and you'd basically play that to the upside. So pretty interesting one in itself right here. Another thing that I am going to be looking at is the counter related pairs. So I will be going over to Aussie CAD. Aussie CAD, to be honest, it's not correlated exactly the same, but the odds are if this is going to be moving higher, we could probably see something quite similar across the board with a few other pairs. Aussie Swiss, to be honest, Aussie Swiss, I'm not really looking for anything in particular. Aussie Swiss, I'm happy to just kind of leave that one as it is. It's, as you can see, it's not really my best sort of scenario for a trend. It's kind of just like typical Swiss nature right now. It's moving sideways. Who knows, it could just continue moving, come back up a little bit. You know, it could work in that nature, and for that reason, I'm just going to leave that one alone until I see something significant. If we break this low and you come down here, even if you get a correction, this could form out to be quite large. You can even retrace a bit up, and then next you know, again, it's just becoming a part of that. So I'm not really interested in that pair whatsoever. Aussie New Zealand. Again, Aussie New Zealand's an interesting one. I think there is a trade in here right now, and I'll show you why. Because if I zoom out to the weekly, on the weekly we can clearly see there is value sitting up in these areas. So if I just mark on the most recent high here, what you can see over here is pretty interesting in the sight of how are we approaching this. So what we have here is we've got this sort of corrective squeeze, which is ascending, but now we're reaching for this area. We did kind of wick 2, but we didn't get there. And we're doing that multiple times, so it's kind of showing that something is happening in that area. So when we go down to the lower time frame, the daily, we can then establish, okay, well, we had the 1, 2, 3, we approached it subjectively impulsive, but there was some sort of corrections in there as well. At that point there, when we approached it, we started to accumulate in this area here. This looks more so like it's expanding into that area now. So I will be a little bit more sharp when looking for an entry. And what I'm going to be doing now is basically just marking it up as something like that. And then I'm basically looking at this as one whole zone for itself. So I can go down to the 4 hour to get a little bit more of a refined entry and see how that's forming. And this is what I said, that it's pretty much shaping up now. So if I mark on where the value is here, right, this whole area is the value. We can see there was a little bit of a gap. We then filled it. We came back up. We created the tops here. We then tapped into the low. This became a middle section, as you can see, with that correctiveness to it, which is really nice. You've got all of that. And now you've basically got your play here. But the thing is, you could take it on this candle. There's always the possibility it does drop off a bit before it goes, and it's still a part of that. So you can't really mitigate against that at all. But if you did wait for an insurance entry as well, you wouldn't entirely be wrong. But in scenarios like this, where it's kind of already created that, it's done what it needs to in these areas. So price going from here up here, it has more than enough, especially with all of this in place, to just go. So that's one of the reasons why I would say that this is a pretty interesting pair in itself for the long. So when I'm looking at it now on the 1 hour, I'll be looking to get in for a more refined entry, because the stop loss placement on that is well protected, but at the same time, for the risk reward, what am I looking at from where it is now? Let's say I'll cover the low. I'm looking at about just under a 3-to-1. I don't think the 3-to-1 is really worth it when what you can do is turn that 3-to-1, wait for an insurance entry, even if it shapes up a little bit higher, and it shapes up around about here, and you get something like that. You may not get it, you may get it, but if you do get it, even if you took it on a reduced risk entry, you could get in with a much tighter stop loss. You're still walking away with over 3.5 on that. Ideally, you'd want to go risk if it comes in play and the structure's flat. Yeah, I would say 15, 16, even 17 is pretty decent. With 17 pip stop loss, you're walking away with 8.45. So you can see the fine line difference of just, if you got the insurance entry, that would turn into a pretty decent trade for, you know, roughly around about 8.5%. If you didn't take it for insurance entry and you took it for the larger time frame and you put your stops down here, you're looking at 2.5. So it's pretty much a 6% difference on waiting on that particular pair. So I'm going to be waiting for that personally. The next thing that we'll be looking at is Aussie yen. The yen pairs are still a little bit corrective, but they still have a bit of this gap to fill. Aussie yen's my least favorite, only because it's not really got a large gap. It's not got a lot to fill. This can just really correct around before it kind of shows its hand. So whilst other yen pairs are moving, this one can still be around about here. And then you might see CAD yen move for like 600 pips, for example, as an example. And then CAD yen's only moved for like 100. So in that light, Aussie yen would have moved for 100. So for that reason, I'm not really too interested in kind of just jumping into this particular trade for no reason. I think getting involved on Aussie yen would be pretty much shooting myself in the foot, because as you can see, it's got more than enough room to kind of mess about with me, where it could just do something like that for no reason, accumulate, push, tap into those lows, and then come higher. This becomes some sort of corrective move into that section. It could do loads of things right now, but when I look at some of the other pairs, they have less of a reason to mess about. So if we go and look at some of the other yen pairs after, you'll see Aussie US dollar. Aussie US dollar is interesting because obviously we can see with, for example, the DXY is coming into an area where we could see potential longs. So we could see this then accumulate here to get a short. And that's something that I will be looking at, because then we can at least play into those areas. We might even retrace a majority of this, which could be interesting. So now that we've kind of cleared that low and we're now consolidating here, if we get a continuation in there, I would be looking to take a short for sure. And I'll go to the 4 hour just to kind of show that a little bit cleaner. Just clean that off. So if I go down to the 4 hour, you can already see the consolidation already forming. I will put the ray line on the retest area there, which basically aligns with the top. And then essentially I'm going to be waiting for a little bit more. So you can arguably say that's your two bottoms. 1, 2, that's your top, that's your gap. This then sells off a bit, doesn't quite get there, and then it comes back up to wherever, and then you've basically got this, and then you've got that filling the footprint, filling the gap, giving you the entry. You've taken advantage here, and then you've been able to play it to the downside. And then that's basically the trade idea. And you can obviously see over here as well, we have a bit of a gap there. And for that reason as well, it gives you more confidence to then create a high probability trade in this one. So that's basically what I'm going to be looking at Aussie US dollar. I would want to see this kind of take its time, probably into next week, Monday, Tuesday. That would be something interesting. What I do like to do is when I establish something like that, and I know that, okay, this could come down and then eventually make its way up. And okay, even Friday, it could, but ideally a next week play would be better because I don't want to really hold this over the weekend. I could then say, all right, let me put on my sessions indicator, which I always mention, Lux Algo, right? This one here. And then I can establish that New York session, this one commits. This one did kind of commit for in Tokyo. London session, New York. We saw a bit of a pullback. Tokyo session, New York over there, and so forth. So kind of just looking at that as well. This would be more so something I'll be looking, even New York session, the London session as well. Those are my two sessions, but I know straight away that, you know, I can see that New York session seems to be prime time, where I'm seeing big volatility come in the market. That's where I'm going to be looking to get involved on this pair. So that's how I use this tool in combination with what I've analyzed. So after I've done the analysis and I'm like, okay, sure, that could take some time to develop. It could be somewhere around about Monday, Tuesday, ideally. I wouldn't want to take it on a Friday, but not because it's a Friday, but more so because I don't want to be holding the trade over the weekend because of gapping and whatnot. And a lot can change with news. So I would want to really get position on a Monday, Tuesday on this one. And if I do, it would be around about New York session based on the data. Kajen. Kajen's interesting, I'll be honest with you. What I really do like about Kajen is that it's given us multiple entries on the way down. So if I just go back to the weekly, we can then see, you know, we're basically tapped into this area. Once we tapped into that area, we had a huge wick. After we had that, we had huge volume, retraced 50%, and then it started to commit and follow through with heavy bodied candles again on the 4 hour. As we zoom in on the 1 hour, we can then see the really nice price action. So we can see that over here, we had continuation one trade there. We had a trade over here, we had a trade there, we had a trade there. We had multiple trades within it as well. We had a trade over here, we had a trade over here. We also arguably had a trade in this section here. And now we're retesting coming back, which makes sense because it has been quite corrective. So what I will be waiting for is for price to either give us our simple psychology. We kind of miss that, we kind of come down, and then we can make our way back up. We feel this, maybe we spike up a bit, and then we sell. And that would be the prime time area that I'm looking at for that sequence to the downside. So something you would have noticed that I mentioned consistently over almost every single video is I always highlight this, right? And the reason why I'm highlighting that is because that's what I'm waiting for. All of this is okay, I understand that, but I'm waiting for this. The reason why I'm waiting for this, because that is a representation of this. It's a representation of that. It's a representation of all of these things. And you can take advantage of the side effect. So you don't have to necessarily get involved, you know, within the second touch and all this stuff. I'm waiting for something so specific, so granular, but it repeats itself over and over again. But then I have multiple ways that I can get involved in it. So by understanding my structures and my edge, where I have a lot of advantage, because even if there's room for error, I can still make money. Like I mentioned yesterday with certain market conditions, right? And I'll just show you over here, there's always an example. You've got this larger structure that's completed. After it's completed, look what it's done. It's sold, may have not taken any entries here. Let's say there was no entry that you could have established. Then after, what happened? We got one trade, two trades, three trades shaping up right. This one's probably less reliable because of where it's positioned, but it's still there. But what I'm really getting at here is, even if I took this in the wrong way and I took it here and I put stops above, or I took it here, stops above, I could still get away with it in some scenarios because I know that it's retracing to come back down to these areas here. So a lot of the time, like, you can get involved on a tight trade there, you can get involved on a trade here, you can get involved on a trade here. You see, I could have taken the trade almost anywhere and I would have probably made money. And that's one of the things that I say about being able to understand your market cycles, because it's not just about taking the trade anywhere, like taking it here and here. Like, how do I not know the cycle's not here? It's because I'm supported by all of that. Once I've seen all of that complete, I know that the likelihood is I'm going to get some sort of sequence after it. And that's why I highlighted it over there, where when that structure completes, what do you think the next sequence is going to be? It could be a continuation of this, because this has already shown that it's corrective, but sometimes we start corrective and then we drop out to complete the move because there's enough volume accumulated in those areas for it to drop off. Again, it works vice versa. Sometimes there's not enough volume in the market, so then we have to get a larger pullback. So for example, we might try do all of this, and then what happens is we get to this point and we're like, okay, yeah, that's good to go. We try to take the trade in there, and then what happens is it starts pushing up higher, taps into the next point over there, and then it finds the liquidity here, and then what happens is it starts selling off. And then we're like, oh man, but that's just random. But it is kind of random, yeah, but at the same time, you have to understand that the market can't go unless it has enough money to for people to sell against the people buying. So it needs to convince people to start getting on the wrong side of the market so that they can then take their money. And sometimes you might be on the right side of the market and you might be shorting at the right time. Like, for example, you might be shorting over here because there was some sort of entry confirmation, but there's not enough liquidity at that point because everyone's selling, and it's now they need to make some sort of trap. So then what they do is they leave a clue, which is the near miss, but then people don't understand that, and then they see price starting to recover, so they think, oh, we're getting a pullback, we're going to be coming back up to the upside. It's now this, you know. So because of their lack of understanding of these small intricate details, they end up getting taken out of the market easily. So bear that in mind. I mean, there's so many different little tweaks that you can make to save yourself money, but also make a lot of money. And I think that's what a lot of people come to the conclusion of later on in the game, when they've seen something happen so many times to themselves, they realize, I don't want to be doing particular things. All right, so CAD Swiss, pretty much like I mentioned with Aussie Swiss, I'm not going to be touching CAD Swiss really and truly. It's not that I don't want to trade CAD Swiss. Like, there is trades on it from time to time, but for me, if I was going to take a CAD Swiss trade, it would be on the daily, and it wouldn't be on my main prop firm account or my main account because of marginal purposes. You know, at the same time, it's a slow mover, but it does move. For example, if you do zoom out, and I recommend like a far zoom like this, and you just look at it from a daily perspective, you know, you've got your structures. Everything you need is basically there. You know, you can mark it up pretty easily, time and time again. Everything you need is basically there. You can see all your little trades in there. There's trades in there. There's a lot of trades in there, and you can make money on it. But again, like I said, you can take the trade in here. Then you have to sit. Okay, maybe it comes down there, you take profit, fine. All this period you don't see money. It then starts to follow through here. You get that trade, great. Don't know how big stop loss is, but anyway, it comes down, it spikes back up. You have to kind of sit through it for a long period of time, let it do its thing. Even if you took the trade here, it then sells off correctively. So that's your clue that you want to be more aggressive anyway. I think it's, you know what, you can make a lot of money on CAD Swiss, I'll be honest with you, but you just have to really understand the pair. You know, I mean, I'm trying to explain it here and give you reasons why it's not a great pair, but because as time went on, I got a bit more technically smart. I started understanding things a little bit better. I can actually understand why I would do particular things. But again, you can just see as a great thing to be doing is just zoom out and you can mark these up. You know, how easy is that? They're all just so clear. I can tell you about exactly how and where you take the trade. Even if I ran bar replay on it, I reckon, you know, at this point here, probably make some pretty decent profit. All right, what we're looking at, Swiss yen. Swiss pairs have a high spread during New York session close, and you're likely to be taken out. Yeah, man, definitely. You know what, the Swiss pairs can be very lucrative, man. I mean, do you know what? It's a hit and miss. Sometimes these Swiss pairs really do come in with good entries. They actually give you great opportunity, great trading structures, but then at the same time, it's like, at what, you know, I'm getting into it knowing that I might have to sit in it for a week or 2 weeks, and then I have to pay swaps, I have to pay all that stuff, as you mentioned. It's one of them ones where, is it worth it? That's why it's kind of like GA in a sense. You only take certain pairs when there's absolutely nothing else going on in the market, and this is the only one shaping up. And then you get those periods maybe like once or twice in a year where the rest of the market is just extremely slow, there's not much going on, and then you basically seek trades in areas where you don't really look for it. And honestly, that's a recipe for disaster as well. What else are we looking at? Swiss yen though. Swiss yen as a Swiss pair is not so bad. Really, I mean, very bullish. I'll be honest with you, sometimes I hate this pair, sometimes You know, it's there. I mean, you buy it for a long-term buy, you're good. As you can see, historically now, since, you know, 2022, we've just been strong bullish. We had this corrective period, but we're back on our strong bullish trend. As you can see, it's just pretty linear. I'll go to the weekly, probably paints a better picture. You can see that. Do I think that these yen pairs are going to come to an end of their run? I think absolutely, man. I think these yen pairs will have a sell-off at some point, but the bear market cycle will be something like this. And then rather than being a complete big sell-off, it'll be a corrective cycle like that. And then that will be the sell-off. In representation of that sell, it will go sideways and then eventually continue higher. We're in a new age. We're in a new age where a lot of money is going into the markets. People are now trying to make more money from investments because of things like Bitcoin. And they're seeing that so many people are getting extremely rich. People are getting tired of the way society's built. People are getting tired of not having much, the cost of living. And it's always in these periods. Every single time, every 10 odd years when we have a recession, inflation's really high and people can't afford things, and then people start getting a little bit more money, you tend to notice that people start talking about investments more. People start talking about diversifying and looking at this stuff. And then what happens is when that period is over, they just forget about it. They just brush it off as if it was, you know, it was nothing. And then again, they go through the same cycle again 10 years later and they're like, oh, I should have invested, this and that. And then the cycle just continues. Some people get invested, some people don't, and then it goes on and on and on. Euro Aussie, I'm not going to touch Euro Aussie at all, man. I'm not a big fan of it. You can see it is moving to the upside though. You know, we've got clear wick fill there. It's had this middle section accumulation here. It's had a strong push. We're most likely going to get consolidation in here, maybe even tap into that area there. And then if we get the accumulation in there, it will go. Odds are this particular pair can just shoot up. It can just shoot and just go as well. It does that. And it might not do it that way, but it could do it correctively. And it just makes its way. And next thing you know, it's up there. So it's definitely a pair to keep an eye on, because you can see time and time again, you know, taps into the double bottom, shoots up, creates continuation, shoots up, creates a little base there, comes in, taps into it correctively, shoots up, creates a larger continuation, comes out, creates continuation here, just on the break, accumulation of volume, shoots up. What's it doing now? Same thing. It's basically accumulating volume in here, doing its thing. Eventually it'll go here, shoot up. And that's basically how this whole entire nature is moving. So if I had something like that, yeah, I'll be all over it. I'll be like, yeah, cool, I understand that now. I know what it's doing. It's accumulating volume for a massive move up. You're a CAD. I mean, yeah, with the New York, I'm just thinking about your question about the Swiss pairs and the New York close. You're likely to be taken out on those spreads, yeah, especially around news, man. It just reminds me of so much. The spreads around news can be horrible, but again, it's the price we pay, don't we? I'm not a big fan of taking Swiss pairs, so I don't hold them that much. But I know previously when I haven't held it for that long. I probably took it out for a small loss or a win and then walked away. Let's have a little look. Okay, cool. So this is interesting. EuroCAD, we've broken above the high here. We've then got the high over there to the left, and we're basically making our move higher, which I do like the looks of. Let's have a little look at that higher market up here. And if I go down to the 4 hour, just to get more of a look on that, yeah, nothing about this looks like a short, man. Because of where it's positioned, I wouldn't even mark on a 1, 2, 3. It's within a squeeze. I think all we need to do now is that's done. That's basically done what it needs to do. That's a squeeze. Came in sharp, tapped into the low. You wait for correction. If you get something like that, here, above, whatever, it's good. It's good. It's accumulation for the next move. And then you basically move into the new territory, and it does whatever it needs to do and just continues. I'm fully for the long right now. You know, it had plenty of opportunity to come back down. You know, you can see it time and time again. You had this, arguably over here, failed, then came up again. Over here, it failed, came back up. Over here, failed. Over here, failed. You can see as it broke the high, near missed. Okay, that makes sense. Failed over there, failed again, created a little squeeze there. It's just not showing signs of a short. It's showing signs of looking for people to try get short early so it can take enough money to keep moving higher. And that's what it really looks like it's doing. So I'll keep a close eye on that sort of thing. Hey Falcon Strategy, how you doing? What is your name, by the way? I always call you, you got a little skull on your photo. What is your name? Let's have a little look. Euro GBP. So Euro GBP, we can see, I think I was looking at this one yesterday. I'm not a big fan of Euro GBP at all, actually. It's quite messy. Until it taps into that area there, and it comes in there, I'm not really going to be too bothered with it. I'll be honest with you. I think it's one of them ones that you can kind of just get trapped into. Brother, can you break down the recent trade EU? Yeah, man, absolutely. I'm about to get to that one. I'm just getting through EG and then EN, and then I'll be on EU. So let me make this easier for myself, and I'll put this. Let's see. Oh, right. James, yeah, sweet. All right, sweet. So basically, EG tapping into these areas, still interesting, I'll be honest with you. It's a risky one. There's nothing really showing strong signs of a short, nothing really showing strong signs of a buy. It's just correctively moving. I think when you've got price action like that and it's just hovering below the value area, all you need to do is wait for a simple move off price to break the high and come back in. When it's done that, you can then establish, where do I want to get involved? Well, perhaps I want to get involved in those areas there, right? Rather than getting involved here, because that can still just continue messing about on you. So when you wait for the break and you get involved here, you're basically then getting involved on the break of that corrective channel failing, and then you basically get it the same way you would take this. Look over here, you see this bit of price action there. What happens? You get a small little consolidation there. Exact same thing. This is the same as that. It's just at a different angle. And when you learn to see things like that, you get that a little bit better. It's a small tweak. EN again, just bullish, extremely bullish right now. It is in a good value area here, which I do like. We need to see a strong turnaround and a move to go short. Right now, we're not seeing that at all. So until we get perhaps maybe this little bit of liquidity up here, it's going to tap into there. If it spikes up, taps into that area, then maybe from there we might see shorts come into play. And then we could potentially look at a short run. But I'm not really too favorable for that. I think it's had plenty of opportunity now with all of this in place. If it really wanted to short, it would have started showing its cards. So I'll be waiting for like a weekly or something to kind of come in play until I see that. Right now it's looking like longs, but this is the sort of area where you see sharper pullbacks. So you want to be a bit more careful. EJ, we're about to be on EU as well. EJ, same situation, sorry. EU is definitely a banging pair. I'll be honest with you. Right now, I'll show you the two trades. So I'm going to start on the weekly just so it's a little bit more clear. And I'm going to rotate this so you get a better view. Right, so EU. Oh, you know what? I'm gonna do this. I'm gonna put it down here, and then think you get a better view like this. Right, is that better, guys? I'm still trying to sort out the screen share, so I might have to start jumping on my computer to do that for you guys. But anyway, for the meanwhile, we can have it like this. So what you can see here, this is EU, right? Beautiful, beautiful. So you can see high time frame. You had the low there. It's basically trading through it. You had a failed continuation, pushed up, tapped in over here, sold off, came back in, retested this, left a bit of a gap there as well, came back up, but retested here, left a gap here, left a gap here. We then failed continuation, which was a great trade in that. We sold off, we then broke this low, but remember we still have a gap there, which doesn't necessarily have to always get filled, but there is a gap there to just pay attention to. And then what happened was we then had this, and then within that, we're basically playing this to then fill the gap. So what do we know about this? Well, we know if price is coming back in at this point here and it's moving to the upside, where is it going? Most likely as a target, we're going to fill that gap. So now let's break it down to the trade that happened. So I'm just going to clear this off, make it a little bit more clear. Right, and I'm going to mark them on. So we've got our low point here now, and we've got our high point there. We have a gap here, and then we've basically filled that. So we're basically trading back in it. Remember, we're still on the weekly, but we have to understand on the weekly time frame, where is the higher time frame moving to, so that then we can establish where the sentiment of the market truly is, the true sentiment, not the sentiment that these platforms are telling you. Because I'm very sure if I go off and I click on whichever one tells me the sentiment, it's probably going to give me some nonsense saying, yep, it's bearish by the hourly, but it's you know, bullish by the daily, and then it's bearish by the weekly. You know, forget them sentiments. If you ever look at that stuff, scrap it, especially for people who don't know, because that stuff can be very deceiving. So what I want to put here is, remember this, right? We've traded back within that, right? So you just need to know where that line is. We've traded back above this, which is basically indicating we're back within this overall range. So now, once we've come back there, we can see we're not retesting, right? This is a very important factor, that we're not retesting this. We want to know that for sure. We want to know that if price is coming back up like this, is it responding to this area and then selling off, right? Because then we know it's just come back to retest, to tap into the liquidity there, which we see time and time again. So the best clue is it hasn't done that. In fact, it sold off a bit and it failed. So arguably you could have thought it was responding to this. Don't get me wrong, I'm getting to this point. I'm just trying to build up the thesis of how we got here. So then at this point here, when we came down, we created a little bit of a footprint here, right? We then scooped up with a 1, 2, 3. We tapped into a random piece of liquidity here, nothing major. And then we started selling off. But that sell-off was nothing else but beginning of this. So it was just filling that. When it filled that, we then eventually had two bottoms. This arguably was the first top, because tops don't really look like that, where they have three sections within the section before it becomes a 1, 2, 3. That's your top, that's your bottom. So we have our two bottoms. Now we're looking at this to become some sort of continuation. We would assume that, okay, we get the gap, we come back down, we then tap into the low, and then we fill and we move, right? But we didn't get that. What we did get was we then got a gap to this section here. We then came to the downside. We tapped into the low. So that was first touch, second touch. Then we came up, we tapped into there, we made a gap. So that was your gap. Then we sold off correctively, but then this became like a 1, 2, 3. And then this became the fill of this gap, but it still left a gap. Very important factor there. So the gap got filled, but we still left a gap to the value, right? I'm just gonna clear that off so you can see it. So this is your gap. You can see we tapped into the gap, but we still left the gap to this point. And what that means is there's still a gap to be filled. So price can very highly probable come back and fill this area, or maybe it's even gravitating to move to the next point. We don't know yet. So in that point there, we then see it sell off, similar to what we saw here, right? Sold off and tapped into the low. What does it do here? Sold off, tapped into the low. At that point there, that's when we look at it two ways. This is either now at this section here to then accumulate continuation to continue lower, and we take advantage of that, or this is one piece of a larger piece of structure and it's coming back to fill the gap. That's where the level of neutrality comes in place. So then now what we're looking at over here is we're looking at the fact that this has failed to continuation. That's failed and it's basically pushed up. So we're looking at continuation in these areas because we know something in this area, the only reason it's coming up is because it's filling that gap. So what you're doing, you're playing the gap fill as a first one, but then you understand you've got this as well, which is potentially a gap to that point. And then at that point there, you're basically trading way back up in the range. You're most likely filling that weekly gap that we covered. So do you see how everything entwines there? How everything kind of laid on each other's? Remember, we're still on the weekly. I haven't even left the weekly time frame at this point, but I don't really need to. And that's the crazy thing about it, where a lot of the time we convince ourselves, my dogs are playing Karate Kid, look. You know, the funny thing is with dogs, they will be acting up, but as soon as you look at them, they act normal. They try to act like a dog. But when you're not looking at them and you're like kind of sneakily looking at them, they're acting like humans, picking up cups of tea and drinking it. All right, so back to this, right? So what we can see here is basically weekly time frame, right? It's not completely necessary, but you can already see weekly value area, we're clearly moving. Now, understanding that sentiment, this whole picture here, that helps us get positioned on the lower time frames. Extremely important. So I'll go down to the daily. If I then take this bit off, and I take this bit off, and I take this bit off, what we'll then look at is, we understand this whole picture here, right? Hopefully. If any of you are confused, please mention it. But what we can see here is what we just mentioned. And I'll put on the clearer, straighter lines. So we've got, let's just say that's your section there. And then you basically got this, right? So that's your overall structure. Within that, we've got two little bits. We've got the gap over there. That's your gap. And then over here, we've got failed continuation. Okay. See, where are we? Yep. Okay, good. So we've got failed continuation. So we understand that the odds are, if this is now failing and we have this as a larger structure and we're trading back within that higher time frame range, odds are this is probably coming to the upside. There's a high probability. What do we need to see? Well, we need to see that the fact of the matter is this failed continuation has really failed. So where's my line in the sand? My line in the sand is there. If price breaks above this, we're bullish. We're completely bullish on this. Because if I measure this up from the top of the structure to the bottom, borderline, we're looking at 50% here. If we're above that 50% area, we're probably, the sentiment has changed and we're 50% of the range, so we're moving to the upside. And then I can ask myself, what's the reasoning? The reason is the gap. The gap is more than enough reason, and the higher time frame weekly, which is showing a bigger gap above, we could easily move there. So now I'm going to go down to the 4 hour as we've come into these areas. So we're looking at this little bit of price action here to understand how could we go long. So we've got that little point there, which it's negligible, don't get me wrong. We could sell off from there, but we want to see why we wouldn't. And we know the sentiment is bullish. So we know that we've got a low here, which could develop. And then basically now we've just created a top. So I'm going to then zoom out a bit. Over here, you've got two things. So you could take this as a 2-touch, or you could have waited for the 3. I think the 3-touch would have been the more safer type of entry, but it's not always necessary, because when an instrument's ready to go, it's going to go. After all of this, you have to ask yourself, and I'll just go back to the daily quickly. After all of this accumulation, do you think it's going to need a lot more liquidity in this area to make its move? And that's a really great question. You think about all of this as a build-up. If this is all a build-up for it to move back up to the weekly, it's not going to kind of stall for long periods of time looking for more liquidity, giving people a reason to get out and get in for the longs. It's going to just make its way and go. But it will have some pullbacks on the way, right? So it's essentially what we're seeing here. So then I go back to the 4-hour, and then we can establish simple trading mechanics on here, right? And I'll just clear that bit off. There we go. So we've then established we've cleared the failed continuation. There is this negligible sort of sharp sell-off point where we're responding here, fine. There is the argument now that we could be looking at shorts, not longs. So we could be saying, well, okay, what about here for a short, right? Yeah, absolutely. That is a strong possibility too. But then we have to kind of ask ourselves as well, if the sentiment is predominantly long, we would want to see this then do something like that. If you get too zoomed in now, you're going to miss the trades. For me, there was no trade in this particular area, but if you wanted to, you could have, you know, arguably taken it over here, and you could have put stops below. You could even gone risk entry on the 2-touch, because the odds are you're either right or wrong in this scenario. You're correctively coming down into this area. You're tapping into this area. You could have gone in with something like that. I don't really see this being the trade for me. I don't see this 2-touch being the best trade in the world. But then you go down to the 1 hour, and then you can kind of see it a little bit more clearer. And then you can see that, okay, so we've got this section here. We've then got a 1, 2, 3 here. That makes sense for a trade. You know, you're basically borderline on the low. You've got a 1, 2, 3 into that section. You could take a short here, right? And you could take the short there. Stop loss could be very tight, actually. Yeah, what are we looking at? We're looking at stop loss there. You're looking at roughly around about 20 pips on it. And then you would have basically tried to play it there to 5 or to 1 and so forth. This one only dropped to about 2.3. So that would have been a break-even trade in itself. Just looking at that, that would have been a break-even trade, or even 1%, arguably. And then it would have just pushed higher. And then when it pushed higher, you would have been like, okay, well, it's clearly not selling. It's really still moving bullish. And then at this point here, it would have started correcting. So you'd go back to the 4 hour now at this point, because it's really pushed away and you're waiting for the next structure to develop as it gets further. It's not coming back and responding to the base, and it's basically moved. Over here, as we slowly get closer and closer to where we are, you could then argue that when price is broken above here, you're basically looking at your next continuation in those areas. So we haven't even got to Ibby's trade really, but more importantly, you can see that at this point here, when you're failing like this, it's showing signs that the market is gathering liquidity to continue higher. At this point here, we didn't really get any clear continuation. Nothing was clean about this. And then it continued higher. At this point here, you know, you've basically arguably started seeing corrective movement to the downside. It's come off and retested this, and then we've had the push away here. There was potentially a very good trade in there as well, where you basically retested here, you've pushed away, and then you could have taken the trade right here. You could have taken it like that, and then you would have just loosely managed it back to the high for about 5.8, and then eventually would have got there, and you would have survived all of that because you would have left it at break even. If you were a bit more aggressive, yeah, sure, you could have borderline walked away with 2.5% over here as it tapped into that inflection area there and sold off back. But I would be playing that range because I wouldn't be getting involved to just kind of walk away with 2-3%. I'd be looking, okay, I'm playing this as a 5-to-1. So at most, I'm taking this as a 5-to-1. And then I would have taken the trade in those areas. The next trade that I would have probably seen, again, there was quite a few trades, you know, you've got this one right here, and then you've got that little liquidity sitting below. You tapped into it there, you can see the response. You've got this little section here. You could have potentially even taken a trade in that one. I think that's a little bit higher risk. And then you've got this little consolidation there. Nothing clean about that, so there's no trade. But this one right here, that one, there's no reason not to. You can already see it's trading through that. There's still more sentiment for it to go higher, as we've seen with the higher time frame. There's nothing really to the left stopping us. You can then see that's a clear 1, 2, 3. And I'll just, for simplicity reasons, let me just clear off all the chart. What you're going to see over here, and I'll zoom in, is you've basically got price like that. You've got your section 1, section 2, and then you've got your override there. You've got your section 1. You could argue that that's your 2 touch, and then your break over there. Again, it's less about so much off that at this point. It's basically just seeing it for what it is, and it's just a consolidation. Because it's not got your clear 3 touches, your middle section and all of that, you might want to be a little bit safer and wait for that insurance entry and take it there. The beautiful thing about this as well, and just the way we trade, and I'll just mark that up, you could have taken it over there, and that would have run for roughly about 1.6. Pretty large stop loss in my opinion, because it's a 4-hour. If you went down to the 1 hour, you know, I'll just show you the trades on the 4-hour right now. There's obviously a lot more trades on the 1 hour, but if we went through all the trades, we'd be here for another hour. You can see here that you had a bit of this element here where it's looking like if it rejects here and it comes in, you can then look at the short, and that becomes more of a running channel for that section. So that's definitely a possibility, but we didn't get that at all. We actually came off, retested all of this, we broke above an insurance entry here, mate. That was arguably an even better trade, even though it wasn't clean. You'd basically just see it as a consolidation. You would have taken it like this, and that trade in itself would have been pretty decent. Even though it ran for 2.5, it's just the understanding of a trade like that that makes you money. And sometimes that's the thing with trading. You don't need to be amazing. You don't need to be 10 out of 10 with getting the perfect trade setups. You can just understand where you want to be positioned and why, and you can take advantage of simple mechanics like this. Another trade right there. Obviously, again, you know, positioning yourself. You can see that override section over here. I could put it in over here, anywhere in that area. And ideally, I'm just protecting myself from worst case scenario. For example, if it comes back down, testing into that. So I wanted to have a bit more. You can see even with such a large stop loss, I mean, what am I looking at? I'm looking at 84. Is that 84? 844. Yeah, that's 84 pips. Even with 84 pips, I'm looking at walking away with roughly around 76 pips. I'm looking at walking away with 4.3%. So it's not even about the size of the stop loss period, like 50 pips, 60 pips. It's not even about that so much. It's just about what can I get away with. And to the top of this structure, I can walk away with 2.1. So I can manage easily and take a 1% profit on that regardless when we get to the top. So that's another trade in itself there. And then I'm going to go back to the 4-hour. So what we see here then is we want to start establishing, you know, is price exhausting? Is it selling off? Is price going to come back down? So we want to start looking at sort of price points. Right now we can see that there was a liquidity point here. There was one there. There was one pretty much here as well. One down here. So these are all areas where price can really just gravitate towards. The ones further down are less likely until we see more confluences in the market. Like after you see price action like this, then you understand that this could be a possibility and this could be a possibility. But the likelihood is that's moving aggressively for a particular reason because it's trying to get somewhere before it makes its move. So what we did see is it didn't respond to those two. It responded to this one here. After it responded, we had failed continuation. We then pushed up higher and there was a trade in there as well. So then what we would end up doing is we would mark that up over here. And there was actually more of an AFT trade in this one. I do remember it. but you'd mark that one up over here. As you can see as well, look, I'm taking that with 76 pips, and arguably we ran for about 1.8. I would have locked in about 1%. So yeah, I would have been out of the market somewhere around about there. Maybe even a break even, who knows? But you could have survived it as well. But yeah, about 0.5% profit, let's say worst case scenario, and you walked away with that. Doesn't really matter too much. Same situation happened again after. You can see another trade right there. I'll show you the AFT one though, actually. So same thing I was just saying about that before. You see this little consolidation there? You could have just basically seen it like this. We haven't tapped into the high there. We've got a bit of a gap to the low if we're going to come back down. But the likelihood is we're probably going to come up and fill that before we come down. So if I can get in on this, then I could probably get positioned well. So then I'll go down to the 15. I'll just zoom back in time. And there it is. So it was basically taking the trade here, and then you would have had your stops just above, just below, around about 15 pips, I believe it was. I know it was about 10 pips. You can still get in. It's aggressive, but again, it's these aggressive trades that can also make you a decent amount of capital. So what happened is we basically had the larger correction here, which we don't know if it's actually going to even come back down. In this scenario, it didn't. It could just still be something like this. So what we did is we had that. We then had the failed continuation here. We came back up. We near missed all of that. We also near missed this section up here. And then we had this bit of consolidation right there. And then we tapped into the override. We had a bit of a failed continuation there as well. If you wanted to go in with a bit extra, I did put 15 on this when I did look at it, just in case it did spike for whatever reason, comes down a bit before it goes up. You still would have probably walked away with borderline, you know, that's running around about 6. You could have had about 5 locked in. Yeah, about 5. Borderline, you could have walked away 5 to anywhere between 5 and 8%. So yeah, decent trade in itself, but you see how something's so intricate on that. And then also there was another trade right here. You know, I'd be less interested in this trade personally because I'd have to go tighter. But again, you're looking at anywhere between 3 to around about 6% on that. It's just, again, it comes down to your edge, what you understand really well and how you can take advantage of it. And then let's just zoom out and I'll quickly get on forward. As you can see, there's just so many trades, plenty of trades. As we move on, you've got this one here. This one here is interesting because you can see it's basically an expanding, but it's moving to the upside. We're moving to tap into those areas, that area up here. So what we're going to be looking at is we see it as that's the base, that's the second touch. We've come in correctively, right, like this. And then that's basically it. So you can either then look at it as that's your 2 tops, 1 top, 2 top, 1 bottom, 2 bottom. After you've gone in the second top, you come back down, you retest for the override, and then that's your entry point right there. And then you take the long right there, and then you basically, you could sell it just below. It's about 65 pips. If you wanted to crop it, you could, but I'll be honest with you, yeah, 66 pips on the dot, happy with that. And then you would have basically rode that up to the ray line, and then you would have walked away with about 2.8% on it. That's how I would have seen it on the 4 hour. Of course, if I went down to the 1 hour, we can then see it a little bit closer. This is where you can probably get away with probably a bit more for refinement on it. So what you can see here is you got a bit of a base there, then price squeezed higher and came back into that base, and we took the entry over there. So you've got that. That's arguably a more refined one. This one is banging. This one's pretty decent as well. The trade in there would have been solid. I think that trade right there, you would have walked away with, you could get tight with that. You could walk away with 19, 18 pips. We're running around back to that high, yeah, about 3.5. You would have taken 3.5 on that. If I get down to the 15 minute and I see that other trade that we were looking at, Yeah, I can see that on the 15. I don't think I need to go any lower. It's tapped into the base there. I take it on the 15-minute over here. I've got a stop loss just below, even 12 pips. That is decent. And then it pushes up over here for roughly around about 4.5. I think at that point there, I probably wouldn't have waited for it to go all the way to the 7.6 over there. Even though that would have been my target zone, I would have probably been 4.5. I would have walked away with 2.5. I would have put it around about 2.5 here. And that would have been the profit on that. So that would have been 2.5. That would have been 3.5. And then arguably, you know, there would have potentially been some shorting opportunity once we tapped into those areas. We saw, did we even tap into it? No, we near missed it as well. So after that near miss, we would have still been waiting patiently. I would have waited for that section to be cleared and looked for continuation, which we didn't have, so there was no trade. And then we're basically tapping into this section here. We've then spiked up, no trade there. We come back down, retest, and then you get this little consolidation, potentially a break even there. You've come back in correctively. Oh mate, there's a trade right there. I think that might be the one Ibby took, I'm not sure, but that's a pretty decent little trade there as well, where you could have just borderline taken it like this, stop loss below, probably go over a bit extra. I would have gone with roughly around about 20, and then I would have rode that back up to that gap fill, which would have been another 3% on that trade there. And then you basically come down, filled it. Damn, these trades are looking pretty decent. Your outlook on Germany 40. Yeah, I'll check that in a second. I'm just running through this. I've almost got through it. And then I'll get back to the 4 hour quickly. So yeah, I mean, look, we can already see over here, we broke the high like that. At this point here, we could have arguably been looking for shorts. So in here, potentially you took some shorts, but the failure of committing there would have then given you the strong bias for the buy here to then fill the gap up here. Obviously, remember, we're still quite bullish on this pair as well. We're not entirely moving for complete shorts. So price is just hovering around and doing its thing. Let's have a little look. So over here, we've got a little liquidity point there. We've got a low point here. Failed continuation. Let's have a little look if there was a trade in that section there. So yeah, nothing on the one just yet. There's one at the low of it, but that's outside of, oh yeah, okay, here we go. So what we have here is, this was a large bit here, which just kind of failed, which is completely fine because it tapped into liquidity. After it failed, it came back sharp, retested the failure, which is completely fine too. And then it continued. Arguably, was there a trade in there? I just wouldn't touch something like that. I would have let it drop off. I'm on the 15, so I'm not seeing anything to go shorter. And then we had this. So you could have set a trade here, which you would have basically put on the break off the failure of that little part there and stop loss above 16 pips. And then you could have rode that into the low here for about 1.4 manageable. And then if it pulled back around about that section, you know, you'd take the break even. But in this case, it did drop off around about 4. I mean, it went a lot further than that, to be honest. You know, but again, you might have just borderline been running around about, what we're looking at, 3.8. Put in it, yeah, you would have locked in about 1, so you probably would have survived most of it because you wouldn't be too aggressive. Then you would have had this shape up. That would have been a perfect little trade as well, below that low. So you could have got in around about there. You would have probably put stops above as well. Borderline, I'd go for the retest area, so I would have gone around about 25 roughly, but I think given the scenario, you probably go aggressive. You try getting roughly around about 20 pips. Price then comes to the low, it's running about 1.4. You're happy to survive the pullback probably in that scenario, so probably a small win there. Price then comes back up, retests this, taps into liquidity there, starts to sell off around about that point there. You'd probably want to be looking at a short again, a re-entry, stops above, about 20 pips again, and then you're still in the trade for a 4% to the downside, and you walk away with probably about 3%. So yeah, some psychology there, man. Like, you can see how it does take a lot out of you on these trades. Of course, we're on the 15-minute, we're still moving, and then it's pulled back. It's pulled back into this area here. It's tapped into the low there. This has become my range. Failed continuation. There is a trade in there as well. Arguably, you take it like this, stop loss above, just in case it does come up for another touch. It then comes to the low for 1.3. You're out the market because, yeah, many reasons why you wouldn't want to stay in that, because it's basically a correction into that low. That's become the middle section. So even at that point there, you probably would have decided not to take the trade because the risk reward is so low. So you would have left it. Possibly, I'm not too sure, because at that point there, you know, it's an arguable situation. But even on the buy, I wouldn't have even taken it. I do like this little structure as well. That's pretty decent. Something like that, I have a bit more reason to go a bit more aggressive with. I think if I measured that up, yeah, even with 10 pips, I've got about 3.7 to the low. So I would have been more favorable for this because it's supported by a better structure. You know, you can see that overall structure. So something like this, you know, I could take 3.5 or even 3% with a bit extra, you know, to the low. So I would say that's a solid trade in itself. Happy with that. And then, yeah, you pull up and then you've got this little trade here. So as you've tapped into the low, we know we're probably coming up into this section, or maybe even the section just above it. So for that reason, a tight consolidation like that on a reduced risk entry makes a lot of sense. You'd basically then play it like this. You set the reduced risk entry after you've had those bottoms. On the case that we do go without coming down for the third, you'd mitigate against it. So I would say about 18, 17, 18. I'd say borderline where you got in is important, but I would say 18 pips, 17, 18. Yeah, I wouldn't want to go too tight. I would give it a little bit extra room just in the case. I put 19. And then you'd basically see that then near miss that area. So you wouldn't want to be too aggressive. Depending on where you are situation, if you are in drawdown, fine, I understand why you would want to be a bit more aggressive with this trade and probably walk away with, you know, maybe borderline just 1%. But I think being a bit loose on that particular trade makes more sense. Let it run, let it do its thing, because what we are coming into this section here, yeah, it's a trickier one, to be honest, because, yeah, I would take the break even. I don't think that I would put too much weight onto the retest of that as well. I would say, you know, we've got this little structure here. We do have a little point above it, which is possible, but with the sharp push away like that, you're not going to convince yourself to stay in the market there. And then essentially you're basically pushing up again, and now we're here. So I didn't add that up at all, but there was, you can see from the amount of what we looked at, there was quite a few trades. I mean, like, there's a trade there as well. You know, there's a trade there, there's a trade there, there's a trade there. There's another trade right here, right here. You know, I can see trades everywhere, but you can see just from how we took it, but this is based on data that's already played out, so it's easier for us to see it and only see wins. We did see break-evens, we did see a potential loss in there as well, or a break-even, depending on how it was managed. You know, and I think it's important to kind of see things like that. I hope that was very useful for you guys as well. I'm going to jump over on Germany 40. So what are you thinking about Germany 40? Shorts or longs? Sean? Well, I'll tell you what I think. We've got price taps into this area here. Interesting. How we tapped into it was pretty impulsive, but how we've responded to it is pretty interesting. we've basically cleared off any idea of this then continuing. But what I don't like about it is the erratic price action, these swings. In yesterday's video, I did cover the DAX as well. Because I'm looking at those swings, I just know that even if I get into a long or a short, it could be tricky. So yeah, you're looking at a short. I don't think a short is terrible. I just think that you need to be very, very careful when you're taking a trade on here. Because two reasons. Let's say you get into a phenomenal short from, let's say it taps into this area, it comes up, taps into it, and then it sells, gives you this, and you get in on that, and it commits. And now at this point here, you're running 3%. You're like, you know what, I'll be loose, I'll just leave it at 1. You leave it for a bit, then it wicks, and then it just comes all the way back up here. And the next thing you know, it's making its way to this point. And then you're like, oh, okay, you know what, maybe I've got this, you know, whatever it is. And then it's here, then it sells, does the same thing again, and it comes here, and then boom, it comes back up. And it does these like swings where you have this big swing low, then you have this huge swing up, and then you have swing low, come swing up. It does seem quite sharp and erratic like that. So if you're going to take a trade, you need to kind of be on your management. You need to be around the charts and you need to be watching it. So now if you're looking at a short, which pairs are you watching? I'll tell you in a second. So if you're looking at a short on this, I'll start 4 hour, and it would have to be something solid, man, because look at this section here. Look at these little wicks here. Every time it enters this zone here, it's just wicking back up for some reason. And it's like, people are not allowing price to really sell off from here. So it's making me really think, is that creating a base for something to then make its way like this, right? To then create continuation. Is it doing that? We don't know yet, because usually when you see a base forming, it does price action like that. If you look over on the DAX and you go through previous price action, what you'll notice is, look at the wicking at the bottom here. Look at the starting of that. Look at the wicking over here. Look at the wicking there. You know, again, if we start looking at the beginning of these corrections, they start giving you some sort of clues. And it's basically price creating a floor, and it's showing that every time it comes in that area, someone is buying it back up. And you need to have a lot of money to be consistently buying these up. So it then makes me think, who the hell is trying to buy this after all of that? So think about it that way. Think of it from the perspective of somebody who has a lot of money, bank, institution, hedge fund, you know, private equity firms, whatever it is. Who's trying to buy this up right now? Who's trying to create a range here? And it has to be someone with a lot of money, and why? And then it makes sense, because in these areas, I can catch a lot of people out right now, and then we can just continue. We can make the move later, but I can just really mess people about. And this is a perfect area to do it. Look, over here, it took out the high, and then look how long it messed about before it had a commitment. And it didn't commit that far anyway, and then it came back up, right? And then it's still in the area. It's still within this whole area. For ages, you have to realize that the market's really messing with people. What you want to do is, and I mentioned this yesterday, is you want to see certain market conditions like this, because there's a lot of room for error. You can make mistakes and you can still be rewarded whilst you make a mistake. Not that you want to be rewarded for your mistakes, but you can be wrong, but at the same time you can be rewarded, and you can still learn from your wrongs. So let's say this is the period where it's all a bit messy, but we've cleared it, and now the market's made its decision that it's going to the next point. Within that, you've got many little corrections in there which you can take advantage of, right? And then it just continues, and then eventually it starts to top off over here, and then you get big spikes, and then it starts to move sideways, and then eventually it comes back down, and then it probably moves into a sideways range, right? All of that is a sideways range. But there's certain market conditions, market cycles. Look at this market cycle. And if you go back and you do a data collection, you can data collect on these cycles, and you can data collect on those cycles, and then you can learn how you can make the most out of those market cycles in terms of your edge. And essentially what I notice is, in there, I then get the preparation, and then I get the clues, and then I can take advantage of that particular move. And then when it pulls back, it fails to continue, and the same thing happens again. I can take advantage of it, pulls back, does the same thing again. So then I have multiple ways, same thing again, right? Then it starts to top off over here, price then starts to fail, and then I get the same thing on the way down. So just wanted to kind of point that out. So it says, which pairs are you watching? Okay, so to be honest with me, I think right now I'm very interested in very few pairs. So I do like the positioning on quite a few pairs, but I just want to see a bit more. So for example, I'll zoom through the whole watch list and I'll just tell you. So Aussie CAD, right now it's not a pair I'm going to mess with. If we break above and get continuation, I'll go long. Aussie Swiss, I'm not touching at all, man. Even though it's tapping into those lows, definitely not something I want to be touching. Then I've got Aussie New Zealand, definitely a favorite for me. Aussie New Zealand is a favorite because I'm looking for a long on it. I'm looking for more of an insurance entry long like this, where I can get in a bit tight, 15 pips. And then I'm looking it to move. I'm looking for it to come in around about New York session as well. So timing of day would be roughly around about afternoon for the UK people. And then, yeah, just a bit later in the afternoon for me in Greece. So it's definitely in my time zone, something that I want. And then worst case scenario, if it doesn't come in and it corrects through London, New York, then it will be an Asian session trade. And then it will be something that I'll contemplate if I want to stay up for, or if I'm happy to let it go. Aussie yen. Aussie yen is an interesting one too, but like I said, the range is too small, so I'm just going to have to move on to another yen pair because it's not the one that I'm favored for. Aussie US dollar. I'm a big fan of Aussie US dollar if we get this structured approach. So if we move in and we get this 1, 2, 3 with the subjective first touch, which is fine, but we fill that gap over there as well, right? If we fill this gap, not the retest, but the gap to the first touch there, I'm in favorable for the sequence. So I want to see something like that, but that's probably not going to come till next week. So it's something that I'm just looking at to see how it develops to make sure that it's gearing up for a good next week trade. CAD yen, again, I think it's another next week trade. I think it needs time to develop. Once it gets into a larger flag, I'll be happy for something like that, man. I'll take advantage of a trade like that any day. So I'm waiting for CAD yen to shape up, and you can see that in comparison to Aussie yen. It's definitely not an Aussie yen, man. CAD yen's in its own ballpark right now, and it's looking very solid. CAD Swiss, nothing there interesting, man. Even if I had the perfect structure here and we went short, I don't care. Not interested in that. The main reason for that is because we have much better pairs on watch. Swiss yen, even though it looks like it's giving you some sort of nice continuation there, that's not what I'm looking for, man. Not after a correction there, then we create a larger correction, which is bigger than the impulse. Impulse is basically corrective as well. All of that is a mess. I'm almost certain that even if the other yen pairs do sell off, Swiss yen might have a small dip, but it will correct very quickly. So it's a short-lived win. This is looking like it's becoming a range to then maybe develop into something to go long. So I'm not interested in that. Euro Aussie as well. I think it could be a tricky one, even though you have this like sort of subjectively decent structure here with a middle section. It's already coming from a base. It's really looking like it's an expanding to the upside. So I don't think that you want to be messing with a short on this one as well. If you are looking at shorts, you want to be extra careful, man. You want to wait for a very solid sort of insurance entry. In terms of isolation, look for this. Just clearing that off. You want to be waiting for that, and then that's been cleared. You've got continuation here, and you basically take advantage of that into that as the first target, and then basically see how it responds here, and if it continues going, great. Odds are, if you go back to the daily and the weekly, it makes sense to continue higher. So I'm all for the long opposed to the short. Then we have EuroCAD. Look, EuroCAD's positioned in an interesting place, but we do have that value area quite far ahead, and we are moving correctively to the upside. So a pullback is probably coming, but I can't tell you when. That's the thing. This can continue squeezing, have a sharp sell-off, come back up, squeeze, and then just do that. So I'm not really bothered with EuroCAD. Only time I'll be bothered with EuroCAD is if we get this sharp sell-off, continuation down here, and then we move, and then we get another continuation down there. And I'm like, yeah, EuroCAD is showing good signs. You know, we've cleared this, we've traded from A to B, maybe we made some money, and then from here I can trade to the next point down there, and then I've got something to work with. Anywhere in this area here is just too risky for me, so I'm not going to be taking anything on EuroCAD. Personal preference, you can try your luck. I'm not here to double guess markets. This one I explained it before, so let me clear that off because it is very messy. I'm waiting for price to tap into that value area there, nothing less, nothing more. I want to see it kind of just do whatever it needs to do, get into the area and then sell off, cancel out whatever type of ascending channel that is, and then get a continuation outside of it. And then I'm ready to go short. And then I can play it into that low, and then potentially if we get something below it, just continue going. Remember, it's not going to be this large, this is just demonstration on the daily, but I'll be looking for continuations and taking advantage of that overall sequence, but from that point there. So I'll be taking advantage of the overall sequence, just not this part here. This would be the high risk area, and then this would be the higher low risk, and then anywhere below that line would start to be the low risk area for me. And that would basically be how I'm looking at it. Euro New Zealand as well. I think Euro New Zealand could be similar to Euro Aussie in the sense that we're getting them strong longs. Exact same thought process. This is a key area that we're sitting in. There's only two ways about it. Either we get a sharp sell-off, and that will take some time, and then we're trading in these areas and we're trending. That's great. I can take advantage of the way that it's trending and coming to the downside, understand the sequence. Maybe it's sharp, maybe it's slow, maybe it has many little small corrections on the way down. Great, but right now we're moving to the upside, right? And we're not showing signs of exhaustion. So if we keep getting stuff like this, just keep buying it. Just keep taking advantage of the buy and keep riding it. Might even make its way all the way up here. Probably some point next year or within the years to come, but you know, we're still positioned pretty good for the buys. So I'm quite interested in buys on Euro New Zealand. Euro Yen, like I said, I'm not interested in Euro Yen. You can see that in comparison to the other yen pairs, Euro Yen does kind of show you some sort of possibilities here. So to be fair, actually, I'll take that back. If I mark this up here and then we look at it for what it is, it's tapped into this now. If we do sell off and we get into a trade here, a trade like that to the downside is not so bad. You know, you could probably even reduce risk because there's nothing there's not many, oops, what is going on? There's not many inflection points. That's what I'm really getting at. And usually when there's not so many inflection points on the way, there isn't much reasons for it to pull back. So you either get a sharp drop off for around about 4.3%, or maybe even here you drop off a 1.5 because there's a small wick there. But besides that, you know, this has room to really come down for the gap fill. That could be banging, could be a banger of a trade. You know, if in a different unit of time, I would have probably taken the trade here and walked away with crazy profit as well. I wouldn't mind that, but you know what I don't like about it? It's still stalling, right? I want to see it really show me some level of commitment. If I go down to the 15-minute, dude, this is good. This is really nice, man. I don't know about you guys, but is anyone looking at Euro Yen right now? Because I wasn't looking at it until now, and now I'm thinking New York sessions around the corner. We could potentially see a banger here. What are we seeing? We're seeing a lot of nice mechanics here. This is quite far away, so I'm not too worried about that at all. We've got the liquidity there. We've really tapped into it. That's good. We filled the gaps. That's another positive. That's done. So we filled this, one. We've filled the gaps. That's two. We've had two bottoms, even three bottoms. So that's good. And then we've basically had our section 1, section 2, section 3. So that's another positive. I can't see many reasons why I wouldn't want to take this. And then I zoom out and I see the higher time frame. There's a lot going on here, man. If I go down to the 5-minute, I just want to see how price is developing. Not looking for an entry. Yeah, it is moving a bit choppy, but I'm not really mad with this price action right now. I would want to see how the hourly closes. Yeah, if the hourly closes remotely without a strong wick and it's quite heavy bodied, and we're basically trading anywhere around here or below, we're good. We're good, man. It could be one that we get tagged out though on this. So you'd want to be a bit cautious because, you know, you take the trade, it comes back up, it spikes and then it sells. It's possible, but given the time of day, what we're looking at, 12 o'clock, yeah, no, it still needs a bit of time. I would wait for New York session. I'm not looking to take the trade now. Let me clear off these charts quickly. Damn, this one got me excited. Anyone else? Anyone mention it? Yo, Zafir, what's going on? Yeah, anyone else looking at this? Really, man? Shit, this is decent. This is a very decent pair. Don't think anyone was looking at it because no one mentioned it, but it's there, man. Look at the whole sequence on the way down as well. There's nothing to the left, so this structure's good. You know, if you look at this, it's through all of that. That's fine. You've got your bases, you've got your gaps as well. Oh, mate, this is solid. I would even risk entry this. Let's go for it. Let's do that. I am very happy with this trade. I am gonna put that up here. Let's see. So let's go here, EJ. Let's do this. EJ. Yeah, man, I'm very, very happy with that. Even as it stands, 15. Yeah, let's go. Oops. Am I not on the right account? No, this is... How the hell? Oh, yeah. All right, 1 second. Let me just swap over onto the other account. Yep, sweet. Okay. And let me open that up. Sweet. All right, just before I do it, I'm gonna do a quick top-down analysis. We've got about 10 minutes to hourly close, so we've got a bit of time on it. I mean, don't get me wrong, there is the feeling to want to just take the trade, but you know, you don't want to impulsively act on something. You want to be a bit more composed. As we can see, we already have the elements of what we're looking in here, so we don't need to overthink it. I do see that we kind of just wick to it, but the response is nice. Let's see what the risk reward is. Yeah, risk reward is no doubt going to be pretty nice. Before I pick this pair, let me just quickly run through the other yen pairs as well, whilst I've got about 10 minutes. New Zealand yen, ooh, even New Zealand yen, but New Zealand yen has that wick. That's a little bit off-putting, to be honest. Not a fan of that. Aussie yen, not a fan of that. GBP yen, not a fan. Swiss yen, a little bit of a fan, but definitely not because of the size. Needs more development. CAD yen, yeah, waiting for more development. Yeah, but and I think at the end of the day, because I'm now looking at Euro yen on its own, I'm probably gonna stay out. Yeah, I'm probably gonna have to stay out of that because the way I would really want to take this is with my yen pairs aligned. Don't get me wrong, this pair can commit. but it's just a personal preference from how I like to take them. Is, you know, if I've got EJ, NJ, CJ all shaping up, structures are kind of complete and one's ready to go, I'm happy to take it. But it just doesn't look like, it looks like the other yen pairs, could mess about. It's only EJ and NJ that I'm looking at right now that could potentially come through. I mean, I've got about 10 minutes to make a decision on this, to be honest. You know, I do like that small risk, probably. Let's have a little look. So I'm not going to go too aggressive. I think I would add an additional amount of stop loss on it. I would go about 40 pips. Give myself some breathing room. I've got about 2 to 1 to the low, and then at the gap fill, I've got about 7.6. I think I could deal with that. What about to the beginning? Yeah, about 3.7. Yeah, it's decent. It's decent. I'm actually, do you know what? It's great. It's great, man. I'm not bothered. I think NJ as well, the wick is becoming less of a problem. NJ is being deceiving by itself, but when I kind of size it up with the other instruments, I'm then seeing it for what it is, and it's really this. And that's the go. So yeah, I'm happy. I'm very happy. That's a part of it. That's a part of the middle section. That's come in. That's probably going to sell off, and it's going to drop off from there. NJ is definitely a reliable one as well. I just think EJ's got more for run in it. So preference-wise, let's go EJ. EJ, 100% happy with that. So I'm going to mark that up. This is a little tip as well. I don't use a calculator. I just put it on here, click stop loss, mark it up, and then I can see that, okay, well, if I'm getting 0.5% there, then I'm probably gonna put about 9 lots on it. I'll probably go less. Yeah, let me go around about 7. Doing about 7 lots. Yeah, 7. It's like, no, it's not even giving me, probably 5. Let's see what 5 lots gives me. Do I get the 40 pips? Yeah. Yeah, good, sweet. 40 pips. I'm in 10 minutes to the close. I'm quite happy with that. I'm going to take it as it is. I'm very happy with this trade. So I'm going to mark that up. And we'll put it in there. I guess what I can do now is I can actually go through my journaling process as well for you guys. So yeah, 40 pips just gives me around about decent. What have I closed? That's done. And yeah, cool. And then let me just do one more thing. Cool, so that trade is taken. I've set it, I set the stop loss. I don't really need to worry about this trade too much now. I can just let this thing, I'm just gonna check it out, just to make sure I was correct with everything. So yeah, I've got about 3.7K here, and then I'm running around about 7.5K there. So yeah, I'll leave that as it is. We can come back and check this out anyway. So that's pretty decent. And then let's move over to the trading journal. So, sorry man, sorry to hear about your network. Nope, not doing BTC. What's that? 16 October. We are looking at EJ. Euro yen. The trade setup I've got is actually a setup 2 for me. It's a live trade, and we're looking at a high time frame entry. So you can see it's quite simple actually the way I've done it. Pull it up here, and then I'll take the screenshots. So let's go to EJ. So I'm gonna just clean this off just ever so slightly because I don't need all the faff, to be honest. I already know what I'm looking at. So I'll just mark this on here. Oops. Cool. Just like that. That's all I need. That's clean as it needs to be for me. So I'm gonna just go down to the daily. Bring the daily up here. I think I'll just add one more line here just for the daily purposes. Cool. And then I'll take that screenshot. Sometimes I'll take the weekly as well, but it's not always necessary. Then I will take a screenshot here, demonstrating the 4 hour. Then I'll take the 1 hour. And I don't think I'll take the 15 because 15 didn't really do nothing for me, but maybe for data collection purposes, I'll just add the 15 in there. But it was a 1 hour entry, so yep, and we're good to go. So I'll go back to my Notion. I'll then click over here and I'll just add the screenshots I took. And that's it. That's basically my base point done. And then I have some tick boxes to do with my trading plan below it. But more importantly, I've just basically got it written in there. Obviously, daily, 4 hour, 1 hour, and then when I get the result, I'll put the result in there. And then you can see I can fill this in here where I put if it's a win, loss, or break even, the percentage I made, and then I go back to all my trades here, and then it will show me, I don't know why, because I've got BTC selected in there. Yeah, and then date would be from, is between, yeah, we're looking at this week. So it's the only trade I've taken this week actually. Wasn't even anticipating taking a trade, but anyway, it is what it is. Happy with it. For shadowing and learning purposes, it's definitely one that I'm very happy with, to be honest, because it kind of just meets the criteria of what I'm looking for. And at the end of the day, you know, if this did spike up, I've mitigated against it. If this does that, for whatever reason, I'm pretty sure it wouldn't do it, but if it does do this, sells off, spikes up again, borderline, I'm still quite protected against that. And then it's, if I just survive it, then I'm good for an even better part of the run or better re-entry. So yeah, we want me to do a quick top-down analysis. Let's go, let's do it. So weekly, as you can see on the weekly, we tapped into the weekly value area over here. We tapped in it there. What did we see? Well, we saw a pin bar right here. We basically started filling the wick as well. So if we go to the daily, what we can see here is after we had that pin bar, we then started to stall and move sideways. So we kind of filled at least 50% of it as well, which is interesting. And then on the 4 hour, well actually before I go there, you can see on the daily we started to consolidate, right? We left our little footprints as well and we started to consolidate. So what we needed to do was establish, is there a footprint in there that we're moving towards that is creating continuation for us to move lower, which works then back to the weekly. We can then see, are we coming to the downside? And if we are coming to the downside, at what point could we see this potentially come down before it goes back up again or does whatever it needs to do? So then after we've seen that on the daily, we go to the 4 hour and then we can see the consolidation a little bit clearer. So then what do we see? We see, not only do we see that there's a gap here on the low, right, that it could potentially be filling, but we also see there's this huge gap here. What do we know about gaps? They usually tend to get filled. So then what I'm looking at here is, okay, if we're filling that gap, how are we going to do it? We need to accumulate some volume. How would we accumulate the volume? Well, we accumulate the volume in a structure. That structure is then showing me, if I look at the mechanics still on the 4 hour, we have gaps to the high that haven't been filled. It's moving sideways, so we get a reference point for a high, got a reference low point. The gaps to the highs have not been filled, but then they just got filled, and then also we have gaps to the low that haven't been filled. So now that we filled the gaps to the top, the likability is we're coming back to the downside to fill the bottom. But if we're filling the bottom and the overall trend is coming to the downside, and we have this little point down here, odds are this could be accumulation for it to just continue moving down. So looking at that then on the 4 hour, I'm then looking at rejection. I do need to clean that off actually, so you guys can see what it's tapped into. Let me just lock that, and then I can clean these off. Right, so that's more than enough. So you can then see that it hasn't closed above, which is completely fine as well, man. It would be better if it did close above, but then when you do look at it for where it is, it's closed above the closes, and it's wicked and broken just above where the wick was. So it has done more than enough in the sense of, in terms of structure, even if I went to the line chart, which is something that I had a habit of doing for a long time, is you look at it on the line chart and you can see it's basically done what it needs to do. However, there is the case where you've got a little bit of a footprint there as well, where we could spike up, tap into that and sell off. If that happens, I can just catch the re-entry. It's not a problem, I can afford it. If I couldn't afford it, I would have then been a bit more cautious, and I would have waited for an additional stronger candle, or I would have waited for something different. But in that case, I had all of the elements of what I'm looking for, so I'm happy with that. I don't need to see it come back up and test this area. I'm happy with where it's positioned. 4 hours looking good. We're coming into New York session as well, and I'm gonna anticipate that this is really gonna start committing around about Aussie Asian session. But let me pull on my indicator, which is Lux Algo, sponsored by Lux Algo. All right, so we can see, yeah, commitment, Tokyo session, New York session, Tokyo session, New York session, recovery, Tokyo session, which is your Asia session, Tokyo session, sell-off, major purchasing, London session, major purchasing, New York session, volatility, London session. Yeah, so Tokyo, New York is where I'm really at. I'm seeing London session buys as a pattern as well, but more importantly, Tokyo is probably where I'm going to see huge commitment. So either we get this be a loss during New York, closes up here, Tokyo opens later, and we see a massive sell, or New York session opens and we just drop off. So just kind of looking at it in that sense where I've got structure matched up with timing, I'm happy to take it. Again, like I said, it's not something that I'm really attached to, because I'm looking at it on the 1 hour. You could probably see it stall a bit, but look at the 1 hour close as well. Look how nice that is. In terms of the wick fills, in terms of taking out the gaps, the elements of that is there, but it's not the best in the world. Still, it's just a candle shape. We had a sharp move in this area. We could see some sort of mess, comes back up and then sells off. That's why I've mitigated with a bit of extra stop loss protection there, because that can happen. Even if we come back up and we get full price action here and then we sell off, I'm still protected, and that's what I'm banking on with that extra protection. But then in the other case, we actually have more than enough in that area, so we can still sell off. So I'm happy to get positioned in there. So yeah, that's basically how I'm kind of looking at it with that. In terms of top-down analysis, if I go down to the 1 hour, because I was on the 4, you can see on the 1 hour as well. Let me just take off the Lux Algo. So you can see here, in terms of the gap fills, did what it had to do. In terms of the footprint, it tapped into it, done what it had to do. Don't need this ray line, I'll take that off. And then there isn't much else that I need to really be messing about with, because I've mitigated against worst case scenarios. And I think that's something that a lot of people can benefit from as well, is just that level of mitigation. So yeah, and then if you go to the 15-minute, I would argue it's a bit too zoomed in. I'd say there's not really much there for me to work with. But again, you do want to be in the preparation, like I said, with this. If this develops for whatever reason, then at least you can pivot with it, wait for that, and then that shapes up around New York session and sells off, then you're still good. Or if that does start to extend and comes up and taps into the next point of liquidity, which is possible, because when we were looking at the other yen pairs, they did look like they had a bit of a long in them before they go short. That's also a possibility. And then from there, you can then wait for Tokyo session and then probably catch yourself. So like I said, that would be the level of the re-entry that I was talking about. I wouldn't be looking to re-entry if I didn't see that level of confirmation in the market. But yeah, again, we're still playing a pretty big move. You know, you take a loss on this, you catch the next one, you make 4, 5, 6%, you're still up. So that's why it's a decent trade, because I can still afford to take the loss, in the sense that the next trade shapes up, I can take the win. That's basically it. So I did get sidetracked. Let's get back onto the watch list. Currencies, EJ. So we did EU, we did this. I'll go down GA. Did we do GA? I don't think we did GA, but GA is looking a bit juicy. It's coming up to the upside right now. It's got a bit of a 1, 2, 3 into that hook point as well. So it's got that sort of ascend into it. It's not the nicest, man. I've seen better pairs, but again, you know, we could see some sort of reaction where it sells off and then moves. I'm just not favorable for that, just because of where it's overall situated. It's in the middle of the range. We've got high above it. We've got some gaps above which could get filled. You know, we've got the low down here. I don't want to be trading in there right now with that sort of reversal. If that was positioned up here and we were coming in here and that was at the high value area, then yeah, sure. I could then say a trade like that would be high probability. If I went like this and I had this trade here, you know, that can still move higher. So I'm not a big fan of GA. GBP CAD. GBP CAD, EA. I think we did cover EA. Covered EA. EA, like I said, I'm looking for long continuation. Same situation. Catch it, go long. Wait for that to develop. If it does sell off, the only time I'll be taking it is when it's down here. But same situation, that could just pull back up, and then that becomes a large piece of very messy price action. Wait for the long. If you get something like that over there, you're good. That will be pretty decent. What are we looking at? So we'll go back to GC. GC, can we see an insurance entry on Euro yen? Can we see insurance entry on Euro yen 15-minute? I think, yeah, it's possible. It is possible because of where we are situated before New York session. So you could see a refined entry, but I would say go with the additional protection because of what I said. Go with the additional protection so that even if, you know, we've made some sort of error, we've got in too early right now, you can mitigate against it. So I'll go to the 15-minute on EJ. If this develops like this, remember what I said. If that develops, you want to mitigate against it. So getting positioned in here with a 40 pip stop loss, I'm still looking to aim for a minimum of a 3.7. But then if this does commit and start, and the probability is quite high, if it does start committing and then coming down to fill the gap, that turns into a 7.5% trade. So, you know, arguably a 7.5% trade is pretty decent with the additional protection. The great thing about it is there might be more trading opportunities. So as the trade starts selling off, and if it's down here and gives you continuation, you might be able to get a scale-in. And then within that scale-in, you don't have to go with a 40 pip stop loss. In the scale-in, you might be able to actually get away with, let's say, 25. And then you get another 8.25 on that. And you've already locked in at that point, maybe around about 0.5%. So your risk exposure is a lot less and you're walking away with a lot more. So just bear those in mind. I mean, remember, that's not the only trade, you know, the sequence is looking pretty good. We're getting 1 trade, 2 trades, 3 trades, multiple trades on the way down. We get another one here, then we get another one here, we get another one here. You're looking at so many scalings because this is the current market condition we're in. We're moving to the downside, but we're doing it with a lot of corrections. So that's something to just consider. That's why I said this is a pretty good trade, pretty good instrument right now. These yen pairs, they're giving a lot of opportunities, and you want to take advantage of it as they come and show up. Back to Euro CAD, GBP CAD. GBP CAD, 4 hour. Yeah, tricky one, because I can see why somebody would be like, oh yeah, let's get in for themselves. This is good though. It's good because this is where a lot of people could get caught out, but really and truly where you want to really be getting involved is when you see signs of, you know, the market turning around. I'll invert this for a second because it's interesting. You can see how price is getting there, and you know, it's done this, it retested that area, it came up, it did this, it then left that, retested this. Over here we basically created something like that, which doesn't really stand out to me for anything. I see that there's a bit of a gap here, so if this was to come up, it could potentially come here and then sell off again, which is a possibility. I just think if you look at this continuously, it's repeating itself, you know, it's correction, retest, you know, liquidity there. There was a small correction there, so it tapped into that as well. You know, not everything is going to be absolute, but you can even see up here, there was a little retest there. Does the same with the lows, you know, taps into the low, creates consolidation. After consolidation, sells out, breaks the low, comes back up, and then hovers, creates another continuation, breaks above, taps into that little hook point, sells off, breaks the low, comes up, taps into the high, comes down, leaves a gap, comes up, taps into something in that area, sells off, small consolidation, breaks the low, comes back up, failed continuation, retest the area, sells off, creates a bit of consolidation here, sells off, breaks that low, retests this area here, comes back up, retests that, comes down, tests the low, comes back up, sits within this range, hits the top of that, retest, sells off, taps into this area here, comes down, and now we're back down there. You can see that this overall is just a large range, but also you can see how we got there. So the odds are we're probably coming back up to the upside. We might even be coming back up here. So when you look at this now and you look at it, it's kind of painting the picture for a possible sell, but it comes down to the point of, all right, how are we going to find that sell? When is it going to appear? And I think the most important thing now is, I'll just clear this off. The most important thing that we'll look at is, let's isolate the current price action. So we've got price there, and then prices over here. All we want to see now is that price is then over here, fails probably to continue for whatever reason, comes down, gives you continuation, and then you can play that to the downside, something like that, where if you get the failed continuation, it's even better, because then it's basically showing that it's accumulating, but now there's not enough buying pressure anymore, so it's selling, and then you get an accumulation down here to then sell, and then you can then trade it into those areas, so you can manage it from A to B and probably walk away with a very decent amount of P&L on that. What are we looking at? Yeah, we're looking at roughly around about even 25 pips. You're looking at about 10%. So yeah, that's basically what you'd wait for. If you just sold off from here now as well, I don't think it's terrible. It's just, you know, price has been a bit sharp, so you'd want to see solid confirmation. You would want to see that, okay, price is there, then it pushed back in, and then, you know, you had something clear as day, because that can still develop and then become a part of this mess, and then develops into that, and then it just keeps extending. And then you get this, you know, and you don't want to be stuck in something like that. So the more you have to play with, the better it is. But a trade like that, yeah, definitely don't let that one pass you by, because you've got a clear run into the downside. You even have a gap to this section here, And then also you have that, and then you have this. So you've got a lot of room to play with. If this comes down here, then at least you can then establish what it's doing at that point. Odds are if it comes down, it's probably going to run. So if it goes, the sequence on that, you want to establish that and take advantage of it. GBP Swiss. What are we looking at on GBP Swiss? Not much. Not much. Got a low here, but it's so corrective. You wouldn't even want to mess with that. GBP New Zealand. Yeah, GN's all right. It's all right. It's got this tapping into those areas, squeezing. Same situation as GC. We just want to see that kind of commit. If it comes down to those areas, could take some time. You're good because you can play that sequence into that section. Doesn't have much to the left. You play a pretty good trade into that. Remember, I'm on a daily, so you know you do need to be a bit patient. But you can take the trades like there's actually trades before this. I'll show you. But even with around about 40 pips, you're looking at around about 7-1 to that low, and then if it starts following through 15-1. But the 7-1 is probably the golden one there. This one, and that's the low risk trade that I've just marked up. This one here, I would wait for that to be cleared. I'd mark on this, and I'd mark on this section here. I'll take that bit off, right? And I'd basically then say, if for whatever reason now we get continuation here, that continuation you can play into this is the first precaution, and then these areas as the real target zones that you want to go for. And then if it continues, great. So you want to play it like that, take the trade in here, probably get in with roughly around about, I'll say 30 because it is GN, you know, it can be pretty crap. And then for the first one, you're playing to about 2-1, so you can manage that for a 1-1 as well. And then over here, you've got about 8% to that low there, which is great. And then you've got around about 8% there. Sorry, you've got 8% here. Then you've got about 9% there. And then you've got around about 11%. And then you're looking at 20% all the way down there. But again, like I said, the 8% trade is what you're really playing. You're looking to go from there to there and be able to manage it safely. And that would be pretty much the bang trade. GBP Yen. I think this is what I was saying the other day, 2 days ago. Someone asked me about GJ, and I was saying, like, in comparison to some of the other pairs, this one's not the most reliable. It comes with a bit of experience as well, but you can see the reason for that is we had the lack of the base. So if I just remove this, you can see that was your low, that was your first top high. This wasn't really a second bottom in any way, and we wouldn't have known. We would have wanted to see that come down, create two bottoms, that's your top, comes back up. In those areas, we'd wait for the insurance entry, we'd take that short, see if we can manage it into those lows, and then if it came back up for the third, then you'd be in for a solid run there, or you could have still been in that one, and you would have managed that one. So that's basically what we were looking at, but you can see how it failed, and for that reason alone, you know, not too interested. Again, you know, you can see that it's gravitating towards these areas right now. So with EJ in play, EJ might push up a little bit higher and then sell, or EJ might just start selling off, then GJ gets there and then continues and follows that. We'll be waiting patiently on that. GU, yeah, I would look for long continuation, man. Long continuation, that's basically in that run there. We're still moving, we're moving up to these areas here. I would wait for something here, and then you play that long, get in long. This is decent trade as well. That was a decent trade. This would be the best trade that shapes up. Guys, if you're waiting for a trade, you don't know what trade to wait for, GU long, that's the one. Took a loss on GN yesterday. Let's have a quick look on that loss. I'm assuming you probably tried to short it somewhere there. Here you shorted it. Yeah, I mean, look, this is exactly what I said about why we would wait for this trade, because you just don't know what's going on here in these areas. This is where people start taking a lot of money. You know, arguably you could have seen this, then you saw that, and then you took the trade here. I get it. I get why you did it. I think I had a friend who did the same thing. Again, you know, it's a tricky place to be taking a trade. So yeah, you wait for that low to be cleared. you'll be in a better trade, especially if you're trying to pass an assessment, you're trying to get your foot in the game, you're trying to build some capital, make your first 10K, 20K payout. And how you do it is you wait for those low risk trades. You draw these lines in the sand and you say, okay, cool. If price does commit from there, great, I was correct. In the future, I'll catch those. If I get a trade here, I've really validated this all being correct. This is all correct. And now the sequence is in order. I can take advantage of that to there. And yeah, okay, I might make 6%, 3%, 2%, whatever it is. But I know that there's a much more higher probability that I'll make money on those in comparison to those. Just wanted to point that out. GU, we covered that. So make sure you take that GU trade. New Zealand CAD. New Zealand CAD. What we're looking at really doesn't look too bad. 4 hour. Yeah, it's all right. If you come back up here, the potential for that. There's even this. I don't think this is the trade, but that's looking like, you know, it's just, I don't like the sequence. I'm just looking at it to the left and I'm like, nothing about that is looking tasty. That's looking a bit like a mess. New Zealand Swiss. Yeah, not a fan of that at all as well. New Zealand US dollar. It depends, man. It's DXY related, but a short for sure. If we got continuation like that on the daily, great. On the 4 hour, it's too early to talk about a recovery, man. So I wouldn't be messing with it, especially if I'm looking at longs on EU and GU, and then I'm going on NU and I'm looking at shorts, and then I'm looking at AU and I'm not sure. It's a tricky one. Like if we start coming back up and we get continuation here, then I can assume that this is probably going to at least come to here, so I can manage it into that point. I can manage it from here to here. That's great. And then if it continues moving higher, great. I'm in a really good trade. And then, you know, I'm not saying that I've called the bottom because I don't really care much for that, but I understand that positioning wise, I'm well protected. I got in early and then price starts recovering all of that. And then I'm in for that overall run. And then with the profit I've got from this, I can scale in to other trades safely. Yeah, we're getting to USD CAD. So New Zealand Yen. Same situation. I think we did cover it when I was looking at EJ. I would have chosen NJ, but EJ just was the preference at the time. I just like EJ. This one, yes. I would wait insurance entry. Insurance entry, again, I'd wait for that to be cleared. I'd wait for this to do whatever it needs to do here and then sell off. And then if you get a trade there, a couple trades, you can take advantage of these. This is where you're going to make some money on that trade and that trade. And then you basically get to the low and maybe it continues. It continues and starts following through. And then you're in for a beautiful trade to the downside. And then you're basically trading higher time frame. You know, you got that low there, you got this low here. Odds are this starts following through. Next thing you know, we could be down here. And then, you know, we're looking at this and we're like, okay, cool, we're down here. Then we start buying it back up and we're in for a great run. So that's why right now I would be sharp with these yen pairs on the shorts. I'll be waiting, seeing how they develop. See how the 4 hours looking. I think, like I said, they're stalling for New York session. So, you know, getting in now, yeah, it can be arguably premature, but again, if I can get in safely and I can mitigate against it, I don't have a problem. I'm happy with it. So yeah, just mentioning NJ there. USD CAD. So Zephyr, what are you looking at on USD CAD? You're looking at longs, shorts. I did mention this one already before. Not much has changed, to be honest. I'm still looking at it for it to just really follow through to the downside. And I'm looking for a potential shorting opportunity. But equally, if this consolidates sideways and creates a continuation to the upside, and it follows through with a candle confirmation, I'll take it for a long, but it's in the area where I could get failed continuation. We could sell off, trade either through, key point, through these areas, we get the continuation below here, and then we sell. And then it's invalidated the trade idea for this to continue like that. So I want to see clear invalidation of any longs to then go short. I wouldn't be touching anything there, man. That just looks like trouble. And I'll tell you why it looks like trouble. Because for any reason, this can just kind of get messy here. And then what you're sitting in price action that's not really moving anywhere. possibly short. You listen, your attention to seeing value is good. I've noticed that. You recognize when price is in a good area, but it's the level of patience you have in this area that is going to determine your true success. I promise you that, right? Because you ask good questions and you pick up pairs that are in good areas, but you look, once they're in a good area, you're already looking for the trade. That's where a lot of people get caught out. You're kind of like 60% on your way to being purely consistent, like consistently making money in terms of a full-time career. But the point that's missing is knowing where and when you're going to be waiting and why. And I think for you, what would be really useful is if you did a little bit of data collection in these areas, right? But when you do it, you're not just collecting the data purely based on that and where you're going to get positioned within there, but you're also then looking at the overall approach. So you want to then establish this section here. Is there any commonalities, like a corrective wave, or we pushed up, we had a correction, we pushed up, that then indicated that this was higher probability for a risk entry high up, or within this run, because I had an approach, these things, you can narrow down how you want to get involved in those areas that can then keep you out of a lot of trades. So just studying that section alone in combination with the overall move, it can really, really help you a lot. But what I would really say for yourself is line in the sand. Here is just way too high risk. That's like very high risk. Why? Because we're above still the value area. We're not really showing any clear, higher time frame sort of structure that's then saying, we haven't got this basically into it, right? That's a lot different. Like if we had clear structure, which was leading into it, it's different. We don't have that. Oops, what did I just do that for? So what we do want to see is we want to see that price is going to exhaust, or at least we see bigger players, right? The bigger players are stepping in and they're pushing price and they're invalidating, this area one, if we got something there, that would be your first entry area. Through or below, that one would be first. So that would be your first one. Remember, that is still moderately higher, low risk. All of that is high risk. Anywhere through or below here, again, it's better, but it's still moderately high risk, right? Because it's kind of coming into the end where it could develop. But you can see how this is interesting. It goes from high risk to higher low risk, to then back to high risk, to then low risk completely. So that's low risk. Very interesting price action there. So yeah, that's pretty interesting actually. You don't see much of that, but that's pretty good grading. And then you can see why that's the low risk trade, because there's nothing really to the left. So I can manage that really well. Over here, if I took the trade here, am I too zoomed out? Let me zoom in a bit on the chart. If I took the trade here, and I've got my, or even if I took it here, right, I've got to take, 45 pip stop loss, let's say, to cover the absolute high. And I'm running around about a 1 to 3 to the first inflection point. But then the second one, I've got 2.3, and then I've got 3%, but I've got so much to be worried about before I get all the way down there, right? If I get into this one, then I know I can get in, and then I can manage for around about 2% to this point. Then I've got around about 4%, 3.8% to this, and then it goes down for its 10% trade. So I've got less to worry about, but it's easier management for me because there's less reasoning, because it's already showing me some level of follow through. Then the next one, which is high risk again, reason being is I'll get in there, but I've got about 1.75, or not even that, I've got about 1.5 to work with. So I've got to be pretty quick and pretty aggressive with this, and I've got to stick by the charts longer. So for me, if I've got to spend more time by the charts, that increases the risk, because it leaves more room for error, because I need to be more critical thinking. Then, if we've cleared all of that and we've invalidated the idea for longs and we're showing a good sequence over here, I know if I get involved here and I get confirmed in, even if I put the same stop loss, I'm still looking at a 6.5, but with less reason for me to be worried or anything to watch out for. So I can just set it, leave it, and walk away, right? Even if I took less on that, I'd still make more profit than most of those. So yeah, that's one of the main reasons behind it. I hope that was useful. If there was any questions, definitely. So I tried to take on the green zone, but took another on EN yesterday. What was a quick loss? No. I'll have a little look at that in a second, and let's just go through the last two pairs. Okay, so USD Swiss looking like a typical Swiss pair right now with its corrective nature. So, you know, we had that, we basically have this, and then we have that. Yeah, I'm not a fan, man, whatever. I would let this one slide. If you got this, even if you got that, it's still sitting on this, it develops, comes up, and then it becomes this. Yeah, I would leave it. I would leave it. I wouldn't get too involved in that. It's just not my cup of tea. Let me say. USD yen. Let's see daily. Yeah, USD yen could be a decent sell, to be honest, because if you look at it here, same with the other yen pairs, you've tapped it into the daily value area there. You filled the gap. You've come in basically with a 1, 2, 3 as well, right? You're basically filling all of that. You're then responding now, which is nice. Even though we have room to the upside, it's not really a big problem because of how price has been moving. There is a gap here as well, which we're seeing across a lot of the yen pairs. We're quite high up in the run. We're coming back in below the value area there, which is good. It's a good sign. We then go to the 1 hour. And what we're seeing here, we're then seeing price essentially messing about a little bit. It's not really showing any strong level of commitment. There's a little point there that I'll be looking at. See how price responds here and sells. Let's go to the 15-minute. Yeah, I would want to see some sort of level of insurance entry here. So I would want to see this come here, sell off, probably give you some sort of trade down here or here. And then that's showing me enough commitment to then play the short. Not a fan of it in comparison, but from the higher time frame, it makes sense why it would want to go. If it then comes up next week and then we get something like that, yeah, great. Because right now it's pretty sharp, so I'm anticipating a sharp sell-off, which is good. We're still Thursday, so we have tomorrow. We've got this. Well, what news have we got tomorrow as well? We've got some nothing major. So we've got this. Arguably, that is our structure. So the odds are we're probably are going to come up higher, and we're going to tap into those areas and sell. So probably I'll be on eyes for that sort of structure there. Or if we don't get there, then it would have to be a next week play where it does this, it comes down, and then does something like that, and then we get a structure like this, and then we play that run to the downside, and that would be our sequence. Okay, so AN, right? Let me go back to AN. So what did you say? You said took a trade on the green zone, but took another on AN yesterday. It was a quick loss. Yeah, I mean, AN's been not so easy to trade. Am I still inverted? No, I'm not. Yeah, look, just wait for AN. Just wait for AN now. I think, like I mentioned, just wait for that insurance entry to shape up. It may not be this large, obviously. It could be a little bit tighter or longer, but if you get a trade there, you're good. There's nothing really to the left stopping you for a while, so you can manage that easily. There isn't a lot of reason if you get that much accumulation for it to drop off and go to the downside. As long as you get in with a well enough stop loss and strategic enough with understanding your structure, you'd be able to play it to the upside. And a trade like this, you know, you're looking at 10%. So for a lot of people, that could be their funding done. So yeah, that's pretty good. Let's see how EJ is doing. Almost saying it's probably still hovering around, but let's have a little look. Yeah, definitely would give it some time. I'm not really bothered with it. It's looking like what we anticipated is possible, where you'd have something like this, and it does that. But I'm gonna leave it. I'm gonna leave it alone. Let it do its thing. Happy to wait that one out, see how it responds, and if we get that, great. Happy with the trade anyway. If you get an insurance entry here, which I think some people are looking at, you're still not wrong. You're still okay with a trade like that. It's just how we tapped into the top. I would have ideally liked to see a break above, opposed to just a tap. So that's why I kind of think that we might revisit that area. And knowing that, I do want to get involved, but I'm happy to add a little bit extra protection on it in the case that we do. If for whatever reason we see on the hourly now, and the next hourly candle is not showing commit. So let's say that the hourly candle closes here, and then the next hourly candle pushes back up here. The odds are it's not going to sell off just yet. It's going to probably come back up before it sells off. So for that reason, you want to be a bit more cautious. After a candle pattern like this, you do want to see some level of a follow through, either the next candle or the candle after. So that's one of the main reasons there. So what I am looking at here now is just to establish that is if this is what it is, then we'll see that. But with that sort of borderline okay, because you know, really and truly, this is where the value was. This is just a bit of liquidity that we tapped into. We've tapped into it now. We're now trading back in it. An insurance entry in these areas would be good. A retrace back up would still make sense, but we've mitigated with it with a larger stop. We're playing a bigger move here. We're not trying to just get in from A to B here. We're trying to play this to the downside to fill the gap, or at least at a minimum, you know, to the base of where the gap opened. So we'll just wait patiently on that. So yeah, that's pretty it. Again, both phone and tablets battery is low. So I will probably be looking to end the stream here. But guys, do you have any questions? Any questions before I end the stream? Just closed the chart after that was off the chart. Took a loss on GN. All right, sweet. Guys, I'm going to leave it there. I'm going to catch you guys in the next one. Thanks for jumping on. And yeah, if you need anything, drop me a DM on IG. If you have any questions or anything you want me to cover, I'll do that. Yeah, no worries, man. My pleasure. Hope you took some value today, and I'll catch you guys in the next one. Take care.